Welcome to this week's episode of the African Agri Overview. In this episode, our spotlight is again on Zambia, where Jacques will discuss why we are expecting a bigger maize crop while El Nino can possibly be a spanner in the works. We also take a look at the latest poultry prices in Lusaka. All in this episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Zimmatic irrigation systems. Zimmatic's pivot and lateral move systems are truly cutting-edge, combining top-notch components, exclusive designs, and innovative features for a reliable, long-lasting agri solution. Before we dive into the economic roundup, however, I recommend reaching out to our expert market analyst, Jacques for detailed insights into the African soft commodity markets. He's your go-to guy for the inside scoop. Now, let's shift gears and take a look at what's been unfolding in the economy this week. The oil price is currently trading at $81 per barrel. The conflict in the Middle East has escalated again over the past week or two, which forced oil prices upward again, and this price should remain volatile as long as the war in the Middle East continues. Otherwise, global demand remains low, which is keeping these upward movements in check at the moment. We also saw the kwacha stabilizing against the dollar over the past few weeks and is currently trading on 26.6 kwachas per US dollar. The US dollar remains on a very strong level due to more geopolitical conflict, strong economic growth, and interest rates remaining on a higher level at the moment. Moving over to the livestock industry, we have seen day-old broiler prices increasing to 14 kwachas per head, while day-old layers stayed on 18 kwachas. Layer cull prices traded on 68 kwachas, while live broilers decreased to 92 kwachas per head. The average egg price peaked on 62 kwachas about a week or two ago, but started to decrease and is currently trading on 59 kwachas per tray. The grain prices in Lusaka remained on a higher level, with maize currently on $304 per metric ton, wheat on $500, soybeans on $410, while soy meal traded on $400 per metric ton. But with that said, Jacques will now tell us more about where these prices might head over the next few months.
Thanks, Johnny, and welcome to all our viewers. We feel it is a good time to revisit the Zambia maize market. Zambia is normally an important supplier to the region, and this coming season the region will probably need Zambia to be a significant supplier. However, the concerns with the predictions around the El Nino weather phenomenon brings a lot of uncertainty. Let's recap our S&D forecast for the 2023-24 marketing year, running from more or less May 2023 to April 2024. We have not made any changes since our early January podcast. It remains a relatively tight balance sheet, but we feel Zambia have sufficient supply to carry them to the new crop despite expectations of continued informal exports next few months to Malawi and to a lesser extent Mozambique. Zambia has had a formal maize and maize meal export ban for quite some time, but unable to prevent lucrative informal exports. The southern DRC maize meal import need, normally met by Zambia, now being met by South African origin. It is still early to make production forecasts for the 2024-25 marketing year, the crop to harvest mid-2024. What we do know is seed companies indicate seed sales were substantially higher than normal. Attractive maize prices the past year saw maize gain significant planting area at the expense of soybeans. Speculation irrigation maize plantings could have tripled compared to last year, and small scale could be up 30 to 40%. Good rains were reported from late December to mid-January. However, not much rain the past 3 weeks in central, east and southern Zambia. Northern Zambia continues to receive good rains. Overall, growing conditions remain fair to favorable, but rain will be needed next 2 weeks to prevent yield loss. Early February production forecasts in the 3.5 to 4 million ton region were mentioned. Drier conditions of late have seen those forecasts closer to 3.5 million tons and even less. Weather forecasters still expect the El Nino weather pattern to continue until mid-2024. The typical El Nino trend caused normal to above normal rainfall in northern Zambia and below normal in central and southern Zambia, which was experienced since mid-January. Rain outlook for the rest of February promising for the north but dry for the rest of the country. It is early days, but El Nino concerns are starting to build. This graph illustrates the Zambian maize price history. Consumer resistance against high-priced maize meal building since January, which has seen less maize meal demand and therefore slower maize buying from millers. Also, subsidized maize meal supplied by the government by selling maize at a reduced price through the FRA to army mills playing a part. The FRA supplying army mills at $220 a ton, while the commercial market price is hovering around $300 a ton. Talk the subsidized maize meal selling under the Falcon brand, retailing at a 20% discount compared to commercial maize meal. The army mills cannot meet demand for reduced priced maize meal, and this seems to cause havoc at supermarkets when the cheap maize meal is delivered. Bigger millers not prepared to sell at a loss and not reducing their maize meal prices to compete with the Falcon brand. Rumors there is pressure on government to supply commercial mills with cheaper maize to bring down the average maize meal price. Where is US dollar denominated prices heading in the short term? Several factors can play a part. Below normal rainfall the next few months are to see crop estimates decline and should be price supportive. If the government does supply commercial mills with subsidized maize, could see softer prices in the short term. It is interesting to note prices during harvest time for the 2022 and 2023 years, see the blue circles, did not decline as one would have expected, probably due to average size crops and export demand. Talk in the market, a crop at or above 3.5 million tons could probably see the $250 per ton level tested by harvest time June to September, see the red line. A crop in the region of 3 million tons and below could see the $300 per ton level held, see the brown line. Take note, the general view remains the region could be short maize this coming season, especially Zimbabwe, the DRC and Malawi. Next week we will discuss the Kenya maize market, where prices remain relatively low despite prospect of a material import campaign in due course. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
A big thanks to Jacques for shedding light on these critical issues. A huge shout out to our sponsor Zimmatic Irrigation Systems for making these videos possible. If you're hungry for more in-depth analysis and detailed comprehensive reports on sub-Saharan African soft commodity markets, definitely connect with Jacques. I'm Dr. Johnny van der Merwe and thank you for watching.